Gold has blazed to a new record high, rising above $2,800 an ounce for the first time ever. Question is why, of course, and many people are blaming the prospects of trade wars. While that's likely part of the equation, the story behind gold's surge, especially here in 2025, is a bit more complicated and nuanced. It's not just about trade wars, it's about what trade wars might represent for an economy that is absolutely struggling. And one reason we know the economy is struggling is because of some of the key industries within it that continue to languish behind, first of all, expectations, but the very idea of an economy that's stabilizing and hitting its soft landing. I'm talking, of course, about another competitor to one we mentioned in our last video on Texas Instruments in the semiconductor business and its struggles with auto industry as well as computers and consumer electronics. Well, following up from Texas Instruments, STMicro said, yeah, we were expecting a recovery to start happening here in the fourth quarter, and it did not. Not only did it not happen, the company is saying we need to get rid of about 6% of our workforce. That's how badly they're struggling and how little they see as far as forecasting recovery from here on. So gold is at a record high. The semiconductor industry can't get out of its own way. There's a global story here that does not include necessarily, it does not focus on trade wars. Trade wars, as I said, is part of it, but it's the fact that trade wars would be introduced in a global system that is really struggling, that was supposed to be recovering and just can't seem to do it. So let's bring in Steve here, Mr. Van Metre. The economy can't seem to get out of its own way. And that, of course, raises a bunch of other questions. Why is that? What is it really that's hampering, especially the automotive business, semiconductors? I mean, these are key cyclical industries. And you would think that after a couple of years of strict downturn, a straight downturn, eventually they find a bottom, right?
Yeah, Jeff, you'd think so. But from my perspective, it comes down to two things: jobs and incomes. First, you got to have a job first, so you have an income. But if you have an income, which is great, well, you need it to go up. And what we continue to see is price growth is outpacing what consumers can afford. And that's really a problem. You look at the automotive industry, and this one you could have seen from a long path away, because when the baby boomers went into retirement, now they're a big generation of buying cars. They love cars. They usually have, anywhere from 2.5 plus, you'll see them, a car for him, a car for her, and then they have the fun car and then the project car. They love cars, but going to retirement, inflation took off. What they find out is, hey, you know what? We're not driving as much. We don't need all these vehicles. We can't afford all of the expenses for them. So they're not buying them, and they don't need them because they're not driving as much. And then you look at the work from home movement. Well, if I'm not working from an office where I'm not commuting, well, I'm not putting miles on my car. And if I'm not putting miles on my car, I certainly don't need to replace it. It comes all the way back to Texas Instruments, to STMicro. We started to see demand for chips. First, cars use a lot of chips. People don't realize that. It's all a function of demand. So we see a slowdown in the economy leading to slowdown in demand for labor, and we see a group of people heading into retirement who's having to slow down as well.
Yeah, Steve, with incomes, it's actually two problems in one, right? There's the first problem that you just said, that incomes need to keep track of, keep pace with consumer price changes that are happening today, which we're already struggling with. But also, there was supposed to have been a catch up from price changes a couple years ago. And I think that's what the car business really represents, as you were just saying, is that a lot of baby boomers said, I think they still like cars and they still would drive cars if they could afford them. I think that's really what changed. And so you had a lot of people, whether they be baby boomers or not, they bought cars. The car buying cycle is, 4 or 5 years. You own a car for 4 or 5 years, maybe 6 if you can stretch it out, then you buy a new one. So you had a bunch of people who bought automobiles in 2018 and 2019 under 2018 and 2019 prices and those expectations. And then 23, 24 comes along, and now 25. And they're in the market for a car, and they're thinking, holy crap, what happened to the price of automobiles? And maybe you hear somebody talking about it, but you don't really feel it until you go to the dealer and say, I want to buy that one. And oh my God, it's 10,000 more expensive than I thought it was. So the income trap, so to speak, is that not only do we need incomes to catch up and stay pace with price changes that are happening today, they still need to make up for that massive price shock that we just went through a couple of years ago. And they're doing neither of those things. And in a situation where they're doing neither, that's where you end up with consumers, as you always point out, Steve, consumers that have to prioritize spending. I got to spend on this, so I can't spend on that. And that's really what STMicro is telling us, that consumers are prioritizing, and therefore it's feeding down through the whole global economy into their own business. And now they have to contribute to the weakness because they're going to start getting rid of some of their own employees, which just makes it all worse.
Yeah, Jeff, and you start to think of it from a consumer perspective. Maybe they want a new car, so they go down to the dealership, and what do they see? Well, the only thing that's really changed from prior models is maybe there's a screen that goes all the way across the dash. And for a lot of older people, we've talked about this before off camera, that's really confusing and intimidating. And so they go, you know what? I like these switches, I like these buttons, and I don't really see a need to pay how much more? Yeah, I don't see the value there. Same issue we're seeing in the cell phone market. AI was supposed to revolutionize demand. And what are we seeing? Consumers like, I don't know what this is or why I really need it, when the search engine seems to do pretty much exactly what I want. And then, of course, then there's also the income factor. Well, maybe I would like a new car or would like a new phone, but you know what? My income is not rising fast enough. As you mentioned, we got to prioritize rent, food, energy. Some of those things still going up faster than they need to be for a lot of households, meaning, hey, you know what? I'm just not going to buy that newest iPhone. Maybe we really don't need a new car. We can just make some fixes to our old car. Everything's working just fine. I think that's what we're facing here, is an economy, and not here just in the US, but around the world, where households are just under pressure and more pressure. They thought they were going to get ahead, and they're finding out they're not.
Yeah, I think that's one of the biggest points here, especially when we focus on the semiconductor business, is that we talked about this last week. Every time they think that they found a bottom, right? This is the bottom of the cycle that's going to start recovering. Oh crap, it didn't. Is that what you're talking about, the lack of incomes, the lack of value in price changes, is not just a short run thing that's going to run its course after a couple months. It keeps stretching on and on and on because incomes have never caught up and are not even coming close to catching up now. So it really forces this prolonged shift in not just consumer, but also business behavior that gets into STMicro thinking, all right, well, hang in there for another quarter because this has got to be the bottom. And oh, crap, it wasn't. So we'll hang in there for another quarter. That's got to be the bottom. And then it wasn't. Eventually, they start throwing in the towel, which is exactly what STMicro announced. Now, let me read you here the summary for that. STMicroelectronics is considering reducing its workforce by as much as 6%, but not laying people off through early retirements and attrition, at least according to people familiar with the matter, as the chip maker confronts a prolonged demand slump in industrial and auto sectors. And the statement said, in the coming weeks, we will start engaging a constructive dialogue with employee representatives around end-of-career support programs built on a voluntary basis, including early retirement. So there's a couple really big points here just in this one smaller company that maybe people have never heard of. And again, it's echoing the point that was made in Texas Instruments just recently. First of all, the business is not turning around. It's a prolonged slump that's only getting worse. And STMicro is saying they're not seeing it's going to turn around anytime soon because that's why they're getting rid of people. But as the other part of this is, like we've seen all throughout the last couple of years, the labor market has been incredibly weak, but it doesn't look like a recession because nobody's laying off. And here's STMicro saying, well, we're not going to lay off people either, but we're going to get 6% of our workforce. We're going to get rid of 6% of our workforce. And so there's this dissonance, right? Because we're conditioned to believe that recessions are layoffs when 6%, reducing your workforce by 6%, which is thousands of jobs through attrition and early retirements and voluntary means, questioning how voluntary they might be. It's the same thing with a different name. So the weak macroeconomic climate is leading and feeding into a weak labor market that doesn't look like a weak labor market because it doesn't have the layoffs.
Yeah, that's right, Jeff, because here in the U.S., we're not seeing continued claims like surge higher like we would normally do when you see income growth slow, at least at the pace we've seen over the past couple of years. But, we come back to this, hey, things were going to bottom, right? What have we been hearing? Yeah, this is indeed the bottom. You and I have been saying it's probably a plateau, but everything was really built up around the election. As soon as the election is over, what did we hear? Manufacturers, and we heard, retailers, people in the services sector, consumers can't wait to come out and spend. Now, was that a statement based on fact that they knew people said, hey, as soon as the election's over, I'm going to come in and do some business with your store? Or were they saying, I really hope that people come and spend because I've been hanging on to this string now for a long time and I don't have much left? I think that's what we're seeing here. And that's what STMicro is saying. It's like, look, we thought this was going to get better too. It didn't. And for whatever reason, they don't want the stigma of laying people off. Now, perhaps it could be because part of the company is government owned, but you stick people out on retirement, or whether it's that or the unemployment line, there's one key thing that happens, Jeff, their income goes down. Incomes go down, your spending goes down. Whether it's a retirement recession or it's a typical labor market recession, it doesn't matter. You still get the same net effect.
Feeds into what we're seeing in the gold price, right, Steve? Because gold prices are soaring for exactly what you just laid out. Yes, trade wars don't help, but what you just said, it's we can't find a bottom on the economy. What better way to express concern over we can't find a bottom on the economy than to own something exceptionally safe and isn't necessarily liquid, but it is certainly a store of value given a high degree of uncertainty. Then along comes, trade wars and potential for tariffs, which are only going to make the situation that much more uncertain, certainly less clear and less like a recovery than they would otherwise. So rising gold prices in this global economic climate makes absolutely perfect sense in a way that the soft landing and consumers going to come spending and all that economic weakness was just about the presidential election. That never really made sense. So now that we see that companies like STMicro and a bunch of others around, I mean, what did Facebook or Meta, whatever they're called nowadays, same kind of thing, like, hey, we're not really seeing business like we would like to. Maybe we're going to start talking about laying off workers or letting them retire voluntarily, whatever the hell that actually means. Or what was the statement here? We will start engaging a constructive dialogue with employee representatives around end of career support programs. It's basically, hey, you have no future at this company, find your way toward the door. So you see that all over the place, all over the economy. And it's not just the US, it's not just Europe. Europe is further along in the most clearest example of this weakness, but it's all over the place. And we haven't even talked about China. So gold prices soaring to a record high, not strictly about trade wars. It's the fact that, I think you put it perfectly, we can't find a bottom economy is a perfect place to own gold.
Yeah, Jeff, and people are they're uncertain. They don't know where to go because they don't know what governments are going to do this time. I mean, going into the pandemic, governments had a little bit of leeway, but now they've got way too much debt on their balance sheets. Their economy's not growing. How are they going to be able to afford to get all this money out in the economy? They're going to have to raise taxes. I mean, nobody knows for sure what's going to happen, not even you and I. So you start to look to alternatives. Maybe gold's the answer, maybe it's not. But right now it makes people feel quite a bit safer about where they're invested. Of course, you also look at the fact that a lot of people are crammed into big technology stocks here in the US. At the same time, you talk about
that's not, no way. Are you sure?
I know.
I didn't hear that anywhere.
No, you sure didn't. But you talk about getting rid of people. You mentioned Meta, but how about Amazon? They didn't want to lay people off. They just said, "Hey, come back to work." And they said, "Are you kidding me? I'm not coming back to work." What did Trump do to a lot of government workers? Say, "Hey, you know what? I need to get rid of some of you, but I can't lay you off. So I'm going to make you come back to work." Now they're up in arms. People are going to retire. They're going to find ways out. And I think that's a big, play here, because who are these people that are going to leave these jobs? They're going to be the people that have been there the longest, which is the highest income earners. And that's an issue because it means these young people are saying, hey, that means if there's freeing up some space, maybe I'll get a raise. No, it doesn't mean you'll get a raise. What it means is these high income earners that have been in a job a long time, that don't have a lot of debt, that spend freely in the discretionary side of the economy, are going to find their incomes down to a point where they're not going to travel as much. They're not going to eat out as much. They're not going to buy all those extra cars. In fact, they may do the opposite and say, hey, we need to trim some things down so we can get by on what our retirement benefits are.
You also made a very good point there, especially where it relates to gold and government debt, is that governments have borrowed through the roof, as you just said, and we all know, I think we know too well that governments has overdone it. But now there's this growing realization and people just asking the question, well, what did it buy? So the government borrowed all of this money for what exactly? Because it didn't lead to this robust economic growth that everybody seems to think has happened when it really hasn't. It didn't lead to this utopian economic circumstance where everybody's, it's all just perfect and happy and, no inflation, low consumer price rates and incomes are rising, the job market's stable. That didn't happen. The US government went trillions and trillions into further debt. And what did they get for it? And so when you realize that's the case, you start to question a whole bunch of things. And it really adds a huge element of uncertainty when faced with even more uncertainty, to put it kindly, for where the economy is now and seems to be heading. So as far as gold goes, you're thinking, okay, Governments, I used to believe that governments were always the last line of defense because they could come in and borrow and borrow and borrow, and that would allow the economy to stabilize and it wouldn't be too bad. Well, the government borrowed, and borrowed, and it didn't seem to get us anywhere. Holy crap, what now? So there's that element to, okay, some of the myths that we thought about the last several really decades seem to have been revealed as exactly what they were. And that's certainly an element that's driving gold and really just uncertainty, unease all over the financial economy too, outside of those technology stocks, of course.
You know, Jeff, you make a really great point about government debt because in the Keynesian model, during an economic boom, governments are supposed to either pay down debt or bring the deficits down to super low levels. In theory, obviously, the United States wouldn't do this, build up a cash reserve, but whatever the case is, you're supposed to put money aside for when things get bad. Well, instead, we said, look at all this money that's coming in because of all the stimulus that we put out in the economy. Let's spend it even more because it's only going to get better. And now the problem is it isn't. So maybe the reaction in gold here isn't a response to, say, the economy slowing or inflation. It's as consumers look around or investors look around. Of course, they believe in big tech, as we talked about. A lot of them believe in crypto. Now they believe in gold. But maybe they're looking around and asking themselves, what happens during the next recession if governments can't spend their way out of it? What if they have to go into austerity and we see asset prices come down? Where do I want to put my money that has the best chance of holding its value? Maybe that's why we're seeing gold go the direction it is.
Yeah, right. It's because if you stop and you look around and everything seems artificial, human instinct, I mean, just common sense would tell you if everything's artificial, I want to own something that isn't, right? That's something that's actually real. And so you might want to own a business that has a solid foundation, or you might want to own something like gold. And it makes perfect sense. And the more that people feel that this is all just artificial and illusion, the more you're going to demand something that isn't part of that illusion. That's always the allure of gold to begin with. Just as you said, Steve, it's not really about inflation. That's never what really drove gold to from the 1970s forward. I mean, yes, gold went higher in the 70s during the Great Inflation, but it wasn't really the inflation that drove gold higher so much as it was the uncertainty of that monetary transformation and transition. And that's exactly what we're getting here. That's what we're really talking about here. Everything from STMicro to questioning government debts and what they actually borrowed. We're really just talking about this transition, the 2020s transition, when it was supposed to have been, they did it. They came in there, they spent money, they did stimulus, the economy roared, and it was going to continue to roar forever after. And so what STMicro is saying and realizing, same thing as Texas Instrument, is that it was all artificial. It was all an illusion. And so if everything's an illusion, which is what we're really starting to see, then it's demand for reality is through the roof.